for a one-bedroom apartment in Evian on Lake Geneva in France will show how it's possible to achieve a return of potentially 694% on funds invested over a 20-year period. The process works with a 25-year repayment loan fixed at 5.65% over 25 years, with the rental income guaranteed at 4.5% and index linked at 1.5% per annum. The rental income index linked grows compounded each year, seen on this column, to meet the loan at 20 years, and for the final 5 years of the 25-year repayment loan there's a surplus of rental income. The funds amount to an initial personal contribution of €53,661 plus €24,356, which is the combined net shortfall per annum for the initial 20 years before the rental income grows to surpass the mortgage repayments fixed at 5.65% per annum. The total invested funds amounts to €78,017, which is the €53,661 initially, plus the shortfall for the 20 years before the rental income grows to surpass the mortgage repayments. To demonstrate how this investment works, we look at the net of VAT price for the one-bedroom apartment with parking at €165,219. The VAT at 19.6% is an additional €32,383, bringing the VAT-inclusive price to €197,602. The net price of the furniture for the one-bedroom apartment sleeping 4 people is €5,485, with VAT at 19.6%, an additional €1,075, brings the VAT-inclusive price for the furniture to €6,560. The total net price for the one-bedroom apartment with parking and with furniture is €170,704. The VAT at €33,458 brings the total VAT-inclusive price for the one-bedroom apartment with furniture and with parking to €204,162. The legal fees at 4% is based on the purchase price and amounts to €8,166. The total price, therefore, with VAT and with the legal fees is €212,328. However, with this development in Evian, under the Residence Tourisme scheme, the developer is funding the VAT for the investors. So the investors pay up only to the net price with the legal fees, which is €178,870, which is the initial total net price plus the legal fees. The French banks will lend 70% on the €178,870, which amounts to €125,209. The difference is between the mortgage of €125,209 and the total net price with legal fees, where your personal contribution then amounts to €53,661. So your total personal contribution of €53,661 is based on a mortgage of €125,209 fixed at 5.65% per annum for 25 years. That amounts to €9,589 per annum. The guaranteed rental income of €7,682 from the management company Cela, which can be seen from the website www.cela.fr, is the 4.5% on the €170,704. Now the VAT on rental income is 5.5% compared to VAT on the apartment, parking and furniture at 19.6%. The management company Cela, they pay the VAT-inclusive rental income, which is €8,105. The €423 is the additional 5.5% VAT on the rental income that must be reimbursed to the French VAT office once per annum. So you are now left with the net return of €7,682, which is the 4.5% on the €177,704. Now the annual fees to be paid by the investor include accountancy fees of approximately €220 per annum to do the tax returns in France, non-refundable charges which comprise public liability fees and syndic fees, which are the recorded minutes of the annual AGM. The third fee is a land tax, or taxe foncière, which is exempt for the first 2 years, subject to the developer issuing the H2 form. The total annual rental income after all expenses are paid from year 3 amount to €7,042. From the rental income, we can see the first year is €7,462 against the mortgage repayments of €9,589, giving an annual shortfall of €2,127. The amount of €7,462 is the rental income of 7,682 less the accountancy fee for the first year, and index linked at 1.5% per annum. So we can see there's a monthly shortfall of €177 per month for the first year. The annual shortfall for the second year is €2,015 or €168, where we can see that the rental income is index linked to the 1.5% per annum. At year 12, we can see that the rental income has grown to €8,632, which is the length of the first lease. The commercial lease can continue for a further 8 years at the investor's discretion after the initial lease to run for the duration of the 20-year mortgage and up to 25 years. So from a total personal contribution of €53,661 plus the annual contribution to meet the mortgage repayments from the rental shortfall for the duration of the lease, which amounts to an average of €1,217 or €101 per month before the investment becomes self-financing. This total investment amounts to €78,017 before the mortgage is paid off, and the property is potentially worth €541,703 at an assumed growth of 5% per annum, in line with inflation. Now, the balance sheet shows the expenses that can be offset against the rental income, which include interest on the mortgage, accountancy fee, non-refundable charges, land tax fee, legal fees, furniture depreciation, and building depreciation over 25 years. This shows a cumulative loss that can be rolled forward each year and effectively confirm zero income tax. The assumed capital growth is 5% per annum, which is in line with inflation. Assuming the mortgage is paid off after 20 years, we can see that the total of €245,442, leaving a net profit of €297,260, where the capital gains tax is zero after 15 years in France. However, the actual profit is greater than €296,260. Your initial personal contribution of €53,661 is based on a 70% mortgage, plus the annual contribution made to meet the rental shortfall is an additional €24,356, bringing your total contribution to €78,017. This is where we're showing a potential return of 694% on your investment after 20 years. The €78,017 against the potential value of €541,703 after 20 years at 5% growth per annum gives you this return of 6.94 times on your invested funds initially.